You've made it to part 2 of my swing trade videos. I want to thank you for watching part 1, and also thank you for watching the previous video series on learning how to use day trading lines. The method that I'm teaching you, it has helped me over my time frame of trading. And again, with any stocks that you hear me talk about or that you see me do your own research and make your own judgment call. Don't take my word as being, this is what it is and this is what you're supposed to do because I told you to. I'm just teaching you the way that I've learned how to trade. And with anything that you do, you don't take anybody else's word for it. You always do your own homework. Do your own homework and make your own judgment call. If you do the charts that I do and it works out for you, then by all means work it the way that you want to work it. I'm just giving you my input and you can take it for what it is. So with that said, we're going to look at our gold chart here. Gold did exactly what we thought that it would do on Friday. We said Friday we should get a bounce. The stock was oversold, as you see here. It was oversold at the, let me get my chart here. It was oversold. If you see right here in the left hand corner, I actually can't point the mouse over to it, but if you see in the left hand corner, there's a little chart that pulls up. Little chart, if you go down to where it says Wilder RSI 14, you see that number 2685. That initially makes the stock oversold. So the stock was oversold. RSI, usually oversold indicators is 30.00. So your 30.00 level is your oversold territory. I actually live by the sword on this terminology. On some stocks, most stocks do not follow this rule, but some of the more popular stocks actually do follow this rule, especially being oversold and overbought. Now some can stay in overbought territory for a while before pulling back down, but this works for me, especially when I use more than one indicator to help me out with my trade. More than one indicator would be the support line, which is 1. That's my 1 indicator. The RSI, that's 2. Your MACD would be 3, and of course this would be 4. Now if all 4 of these line up, that could be dangerous, but I mean, again, there's always going to be 2 out of 3, maybe 2 out of 2 indicators are going to look your direction. All of them will not line up. They will line up after your trade is going the way you want it to go. Yes, they will line up, but right when you start to trade, right away your indicators are not going to line up. So just for instance, this is 1, this is 2 that lined up, so I'm still missing these 2. What we're looking for in the ADX is we're looking for the ADX, the green, which indicates your bullish levels, your bearish levels. The red one is your bearish levels. You want to see the red one tend to trend down, and you want to see the green one trend to go up. You already have the ADX. So this is your DI. This is your DI. This is your ADX. You want your ADX to go higher, which actually shows the strength in the stock. This is what your ADX will show you, your strength in the stock. So as ADX is going higher, you're going to watch the green, your green indicator, which is your DI. You're going to watch this go higher as well, and you want your red to trend down and cross between 3 of these levels. So of course you're not going to get that right away. It's going to take maybe 2 or 3 days before you get these indicators to actually line up. 2 or 3 days, you may have another pullback. You know, it's totally up to you on how you trade these indicators. For me, all I need is for two indicators to look my direction, and I'm gone. That's all I need. And sometimes, you know, most of the times, 95% of the times, my indicator is these lines that I draw. I live by these lines. This is my lifeline. These help me from what I'm trading with, but these are my lifelines. But again, as I said yesterday, I bounce off this line. It's good to go. The stock is good to go. You could buy it. You could have bought it right before close to get into this jump rally. And pretty much what you see here, especially with this gap, and I'm going to talk about that too, especially with this gap, what you see here is a sell-off from here, 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 and a deep sell-off here. When you get a pop like this, look at the shares, 16.6 million shares compared with some of the other days. I mean, you're not even breaking above 7 million here within this time frame. You're not breaking above 7.3 million, I should say, until you got here, until you got to the sell-offs. But this is strong. This is strong. Not as strong as the sell-off, but this is strong. And oh, what I want to say also is 90% of the times, stocks, when you have a gap, they will retrace back. I'm a strong supporter of a retracement and then going higher. I'm a strong supporter of that. If this stock was to, now if I was, all right, I'll say this, if I was in on this stock on this bounce, I would have sold my position here. Now of course this is swing trading. By all means, you can always take your swing trade out to what your target may be, and your target may be this brown line here, which you would find some resistance here in this area with these three touches here. Of course, this would be your resistance area and your pricing target. Also, not only that, that would be your gap fill area. Actually, your gap fill area would be here, 130.57. That would be your gap fill area. So if the stock is in this area and you bought it here, you can hold it to see if it breaks this resistance to go higher. You can sell it and wait till it retest back to this support or resistance line and then buy it to go back up. So I mean, it's a couple of ways you can approach this stock, depending on which way you want to get in. But again, if this from this bounce here, I would have bought there and I would sell here, only because again, I'm a strong believer about gaps. I do believe stocks do come back for a retracement, and they tend to do so. As you see, look at the gap here. As a retracement up, it has the gap fill from the lows of this day. So this day you have the last is, I'm sorry, not the last, but you want to know the low. The lowest price on here is 143.43. So 143.43. Your high here is 143.43. See how that matches up? Coincidence? I think not. Not a coincidence. These things happen in stocks all the time. All the time. Some people pay attention to them. Some people choose to ignore them. I pay attention to them because these stocks, they tell you a story, and it's up to you if you're going to read the book. So, but that was perfect. Look at that. Low 143.43, and I'm looking at the low from the pricing history right below from where it says Friday 4/12 2013. You see price history, open, high, low. The low of the day was 143.43. The last of the day is 143.95. The 143.95 is where the stock ended. That's this point here. That's where the stock ended. Your high, 143.43. Typically, the low of the gap can also be considered your gap fill on your going high, or your gap fill area. So the low or the high of the day that you're trying to fill in the gap for could be your gap fill area. So the stock does not necessarily have to reach the where the stock actually closed at that day. It can actually hit the low of that day. So I mean, you have two areas. You have the low of the day, and you have where it last traded at that day. You can use those two areas. Let me I can't expand the screen more, but sorry about that. But I just want to show you that little part there. I mean, it's just things happen in the stock market, and you just have to know how to trade them or how to react to them. They happen all the time, I mean, if that wasn't a perfect example, I don't know what else to tell you. And also with SPY, it happens all the time too. It happens exactly with SPY. Trade that one all the time. A lot of people that I trade with can actually tell you the same thing. I'm a strong believer in those gaps, but let's move on. So again, I would sell here only because there's a possibility that we could fall back to fill in the gap. Now, we don't have to fill in the gap right away. We don't have to fill it in the next trading day. It may not fill in that Wednesday. Sometimes these things do not retrace back right away. Sometimes they take 6 months to retrace back. It can happen. It actually happened with SPY on the one gap fill where I explained to you in the other trading videos. The blue line was the gap fill area. Let's go there. Sorry, not the blue line, but the red line. We have all these lines in there from us, of course. And we have this we have this line in there from us, of course. But remember, this red line, we said this was our gap fill area. Your last here was 159.75. Of course, the stock demolished this area when trying to retrace back. You almost got a gap fill here. The low was 160.25. The high was 159.89. Really close to a gap fill, really close. But you also have to use this 50-day as support. Not only do you have that, but you also have the purple line that we drew here as a support level. So remember, these levels that I draw, I love them. I don't know what else to say about them. I'm speechless when I talk about them. I'm just speechless because I've noticed so many patterns in stocks, and I have to share my experiences with anybody that's willing to learn what I've learned. So let's get back to gold. So as we said that of course the stock can trace back. Is it a buy above this level? You can buy it. In my eyes, you can buy it. So again, of course, this is not don't take it as my recommendation. You do your own due diligence, and you buy the stock when it's comfortable for you. But for me, I would buy the stock once it's above here. That will show me some strength. Now, you will have trouble when you get here. I like to buy low and I like to sell high. This, of course, would be my low, and then I will want to sell high, either when it retests this area, or this area. Of course, this would be my target on a swing trade. I can swing trade this from here to here. I can. And because I'm swing trading, if I get in at this level, if I buy in at this level, 125.03, and the stock happens to retrace back to this level, I would add more, because long term the stock is going to eventually fill this gap. And again, my thought is that this stock will fill in its gap within about a month. So I'm giving it almost 28 trading days, because I would want to get the way I trade is through options. So I would get the option that would expire the next following month, and I would trade that and wait for my stock to reach the level that I want. If the stock happens to get to this second white line and then it pulls back here, I mean, it could pull away anywhere, but I'm just giving an example. But if it pulls back to here, I would sell, only because I want to lock in my profits. I don't want to take the stock and jump back all the way back to a retracement. I do not want to have that happen. So I'll take my profits whenever I can. And the same to you. Take your profits whenever you can. Even if it's a swing trade, a swing trade is better profitable than negative. If you're profitable, you can take your money. You can always re-enter. It's never too late not to enter a stock. Well, I'll take that back. There is a time to be too late. If you don't get the level that you want to buy in, wait until you get a level that you want to buy in. Really important. Really important. Don't chase a stock. Never chase a stock. If you chase a stock, you're going to burn yourself. So, this is what happened here. Your lines, resistance. We'll see what happens on Monday. Monday. Hopefully Monday is a good buying day. We finished off on the sell-off from the market on Friday. The sell-off actually pushed gold up, and I think I said this in one of my training videos for day trading lines when I was on SPY. But usually in a market correction, SPY is down huge, gold is down huge. That's what you get in the market correction. Both stocks are down huge at the same time. Usually marks 99% of the time a market correction, because gold usually goes in the same direction as the VIX, which is the fear index, the volatility index. When SPY goes down, VIX goes up, gold goes up. They travel the same way. Now, when gold and SPY travel the same way, usually not a good sign. In a bullish market, gold will tend to travel up, but when it's a bearish market and SPY is going down, gold is going up. So I'm hoping that we can get the same bull run that we got with gold back in 2011. If we do, then we can be looking at brand new highs, and this swing trade can make you a lot of money. So let's make sure we can make that happen. Make a lot of money using my method. And again, of course, you buy at your own risk. Not sure what your risk level is. A lot of people's risk levels are different. Mine is different from yours. Yours is different from mine. This white line will be a really good confirmation above this white line. It will be right above the top of the sell-off the deep sell-off. It would be the top of the deep sell-off. This level would be a good level to buy, so I would also buy it here too. Again, this is my stop level. I'm stopping here. If it touches, it goes back down, I'm letting go. I'm taking my profits. If it touch here and go above, I'm a happy camper. I'll just let my winner run. I'll let it run. Let it run until it stops. So that's gold for you. We're just gonna watch it. If I trade it on Monday, I'll actually add that to my trading video on Monday. If I trade it on Monday, I like the level where it's at. It's actually in the middle, in between here and here. I like it there. If it stays strong on Monday, then I may enter. Again, if I enter, it's a swing trade. It'll be for a month. I can also day trade this too, and you could trade it. You know, if I day trade it, oh yeah, well, we can do that too. If I day trade it, then of course we're going to use our previous lines. If we want to get some more lines in here, we can use our day trading lines and really find out what's really going on with the stock on a minute basis. So we're on a minute chart. We see that there's a level here to be reckoned with. This level here represents something. Let's chart it. Now, again, if you know why I charted it where I charted the stock, I like these touches. I like this touch here. It's not a touch, but it's close enough. I like these touches here. I like those touches there. Let's scroll down. I like this here. I like this pricing and this level here. I like this touch here. And of course, I like that. That's why we're charting, and I like this level too. So we're charting it there. Good level to chart. And again, remember our 200 day and our previous swing trade video. 200 day real important in the 1 minute chart. Above it is good. Below it, not really good, but there's a bounce here on this level. And now it's chasing the 200 day, pulling above the 200 day. You notice that? See that? Actually, let's chart that. We'll chart it right there. We're charting it there because we like this down red. We like that guy there. Zoom in just so you can see it. So we like that red, we like this, and we like this. But notice, if you have made this chart, if you would have made this chart while the stock was actually trading in this range, it's above the 20 day, the 50 day, you know, it's neither here or there. You notice that the stock stopped here. So you're like, okay. After you've charted this line, you're like, okay. After it stopped there, you're like, okay, that's 2 in that area. So now you make your line there. You make your line because it matches up with this level, and it matches up with this other red line there. And you say, okay, there's a bounce. Bounce right above the 200 day. It almost stayed above this level. Got back low. Bounced right here again. Good buy. 3 touches. I like that. 3 touches. Good buy. And take it. And I like it on a dip. Strong. I mean, it's a day where SPY was down huge. Gold was up huge. It's a bullish day for gold. You couldn't go wrong trading gold at this level. Trade it, get it, take it for a swing if you want, or take it for a swing and hold. Take it for a swing and hold, or a day trade. This would have been perfect because you overcome these previous tops. You overcome this top here. You overcome this top here. You overcome that top, but you see how it fell right back below the 20-day. So it falls right back below the 20-day, sell. Sell. Comes right back below the 20-day, sell. Buy, sell. That good profits right there. Now, remember I was talking about the 200-day. Came back above the 200-day and stayed for a while. Bounce, 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 bounce below, but still above this line. You have to use these different levels and your moving averages as lines of or levels to actually to pay attention to. But look at that. It fell below but got back above. In this area, I would not have traded it again. It's too tight and your time is running out. Too tight and time is running out. And when I say too tight, because your level here and a 200-day, too tight. Trade it, pretty much trade it at your own risk kind of thing. It ended below the 200-day, but that's fine because it still ended above this level here. Now let's see how our level matches up with the previous day. And when you look at that previous day trading, of course we've already charted that line in the previous video for swing trading. Swing out here. If that's not pretty, I don't know what else is. We charted this line from here. We charted this line from this day. If you would have charted these two lines from the previous day, that would have gave you an edge on how to trade that day, on Friday. If you would have made this line here, you probably would have made another line there. Here, I mean that would be another line too. I like that level there. Or that level there would be nice too. But if you made these two lines from the previous day, look at these matches. Look at that. Of course we can't use the 200-day on the 2-day chart because the 2-day chart is charting. When you're looking at 200, it's trading off of or it's using the average over a 200-minute time period. So that's why it only starts here at about 1 o'clock or right before 1, maybe about 12:40. That's why you see it here, because it's only on a 1-minute chart and we're going back to as far as this chart can go for 1 minute, and you're looking at a 2-day period. So over a 2-day period, of course, a 200-day is pretty much like the 200-minute. So the 200-minute is where it actually starts to show up, and of course it works here. But I just want to show you the trading lines. Look how they match up. This matches up. This matches up as well. Can be a good level to go off of, and that looks really good. I like that. Alright, so back to our minute chart. Alright, but that chart looks good. So we know these two levels here we actually just drawn. So we are looking for the stock to maintain the 124.94 level. That's what we're looking for it to maintain. It has to maintain that level. Now it could break through that level to retest the other white line. Once it breaks through the other white line, you have a 90 something chance. I'm not giving an exact percentage here, but you have a 90 something chance that that stock is going to retrace to that red line before moving higher. Once at the red line, of course it would be oversold again, and then we'll have the same thing happen again. Okay, but I do think that gold will be strong. There's a real possibility because I do think that the stock market is going to enter into a bear market, and if we enter into a bear market, gold will go higher. Gold will go higher, as a lot of investors they leave out of the stocks into a safe haven stock, and gold is a safe haven stock when the market is bad. Alright, so that's it for gold. We're going to check up on this on our next video on Monday after the market closes. And I actually want to bring up another stock that I trade. I actually own a Lennar home, so it's L-E-N, Lennar. I actually put these lines in here right before I did the video. I actually did another video before this one, so messed that one up, of course. But I had to do another video, and I didn't delete these lines. I actually forgot to delete these lines so I can retrace them again, so you can see how we got the levels that we got. But what I want to do is show you how I got the levels that I've got. And from my other videos, if you followed them correctly, you would actually have made these same lines too, just like I have here. So we like this level here, there. I mean, this doesn't have to be to the T. You can make it to the T, it's up to you, but I'm looking for the touches here. I don't have that many touches. Let's look at this area here. I want to show you something. You have a high of 34.20. The next day you have a high at 34.22. Here, the red line, you have a low of 34.27. So of course not touching the other two lines. Here you have a low of 34.25. So again, not touching those levels. You have 25 there, you have 22, and you have 20. So you're not always going to be right exactly there, but you can give or take maybe 5 cents from your area that you want to be in. It's close enough. You know, that's how I call it. I call it that it's close enough. So where my line is 34.25, close enough. All right. Oops. All right. So we charted this line. We like this area. We like this gap. Look at that gap. And you see the gap fill right here. What's the low? 37.25. What's the high? 37. I'm sorry. Yeah, the high 37.36. 37.25. That's the low. Yeah, that's the low. 37.25, and the high 37.26. So gap filled, completed. So I mean, again, I look at that. It only took 1, 2, 3, 4 days. And actually, I want you to see something within that 4 days before that gap fill. Just want to zoom in here just so I can see, just so you can watch this. So not all the time does the stock come back right away to fill in the gap, but 100% of the times it's going to come back eventually, whether it takes a day, 2 days, an hour, 2 weeks, 9 weeks, a year, 2 years, 3 years. Eventually the stock will come back. And depending on how it's trending or trading, it can predict, or you can actually predict, that the stock will eventually break a certain level and then fill in that gap. That gap is pretty much like a black hole. It sucks it in once it reaches past a certain resistance point. We made this line here based off of pricing levels, and it matches up with this. Look at this. We're gonna get rid of that line, but look at this. You see that? It's close enough. So touch of the support. 1, 2, 3, 4 days. Support. The 5th day, gap fill. Gap fill. 5th day. But what happens after that gap fill? Now, remember, we're in the daily chart. So after that gap fill, it tries to get back above the support line. It fails, jumping higher, engulfing the previous day below the support line, but bouncing off the 20-day, holding the 20-day on this day, still holding the 20-day on this day, getting back above, trying to break back above resistance. This is what you call a false breakout, but it's still tradable. Show you what I mean. Just trying to zoom out here. Actually, here at this gap up is your, this is your I'm sorry, your fake out, not your breakout, but your fake out. And I say it's a fake out only because you got the gap here, held resistance but broke resistance. Majority of the times, you know, I'm not going to even say majority of times, but some of the times you have to be choosy on where you enter your stock. Remember, I like to enter a stock at the lowest point. Here can be good as long as now it's above the 20-day. And then of course this would be your this can act as a resistance level because of the pricing action here, but it got above, and you got as high as the 39.22 mark from here. I mean above the 20-day, so above here, so you got about a $2 gain almost there. So I mean, it is tradable. I'm not going to say it's not tradable, but it was tradable. Now if you were going long on this stock at this point here, then of course here you have your retracement. And again, of course, as I say time and time again, these levels here are your make it or break it levels. I like a stock to hit a certain level first. Once it does, it's good to buy. This level, perfect buy. Housing was in its recovery right around in this area. Actually, last year was a phenomenal year for housing. I actually closed on my house, or my brand new house. I actually closed on my brand new house in 2012. So this was a phenomenal year in the housing market in 2012, and actually 2013, pretty good, phenomenal year. But interest rates are going up, from the Fed speaking the other day. So interest rates are going up. Not sure how that's going to affect the housing and LEN, which is Lennar's stock, but that's we will see. We will see how that happens. But the false breakout here, and the false breakout because it's in this area to here. I mean, you could trade it how it is. You can trade that level. It's a false breakout because a lot of people like to see a lot of people like to see more than a $2 gains. A lot of people like to see $10 gains and what have you. And most of the times it's how you want to trade it. You can buy it here. Again, of course, I like to buy it low. You got this gap. This is good. This gap would have got me into this stock to go higher. Here could have been a dangerous day, but depending on your threshold and how much you can lose, if you would have bought here, and I'm sorry, not bought there, but if you would have bought here on a gap fill and you did not sell high, if you can bear the pain of losing 37.25, bouncing here, 36.90, if you could have bared the pain of the stock on a swing trade still holding the 20-day moving average, then you had 1, 2, 3, 4 chances to get out. Actually, this long candle here, as it fell below the close of the previous day, could have been a warning for you to get out. You have the open here, open above the support, and actually close above support, but you have this dip right below the 20-day. That could have been another indication to get out. Sometimes the stock will warn you. That can be your get out. Any test below that's dangerous to me. Why lose a winning trade? If you're winning, get out. You can always buy it low, and it was giving you your warning. Get out. Look at that right here. Buy it again. Now you're back above the level that you sold, if you would have sold at this level. That can actually hold excuse me, this can actually hold a really nice resistance point. Anywhere above this level can actually indicate another bullish run. So we'll go to the other part of it. Look at that. It stopped here again. That can be your 3 touches there. 1, 2, 3. That could be your 3 touches there. Break below it, this level again. You could have taken it here, and how would you know that you can take it there? You don't get red candles all the way down. You actually get a little green candle here, support, higher excuse me. Let's go back. Alright, so you have a lower low here, higher 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 low here, a dip below the 20-day, boom, back, boom, and a breakout. Sometimes it takes time to learn the patterns. So this swing trading video series is probably going to be a little bit longer than than my previous video, only so I can make sure that I give you all the tools that I've learned and how to try to judge the stock the best way that you can, using all the indicators that I use. So how to judge the stock the best way that you can. But of course, theoretically, you're at higher highs, and look at how I want to show you from the last 2 days. But let me show you. Here's your gap. This long red candle, your gap fill. Could you take it there? You could, if you could take this pain here on these 2 days or 4 days. But after this day, getting back above support, it got here, hit this level here, back here, perfect entry, perfect entry. Even here on this green line, perfect entry. Look at that. And another confirmation, perfect entry. Take it. There was a stop there, but remember, if it doesn't fall down, why exit your run? You could exit here because now it hits your point if you entered here. That was a nice game. Let your winners run. Let it run. Bounced on the 20-day, bounced on the 50-day moving average. Hit resistance here. Boom. Broke resistance. Sell. Sell, sell, sell. Your purple line. That's good pricing level action. That's our exit. Purple line. Now you can also take it as the previous high and actually got out there too. So totally up to you. You can mark your own exits. Yeah, I mean you can mark your own exits. So all right, so we have that there. We have that. There's another gap. Playing the 200-day moving average. There's your gap. Boom. Back above. Hit this point. Another 52-week high. There. Now, what's interesting about Lennar is you can probably make a trend line. At those levels there. Either one. You can do it there, you can do it there. You can probably make your trend line. We'll leave it there because again, this training video is probably going to be a longer series. It's already a longer series because I'm already 48 minutes in on this video, and I still thank you for your patience, and I'm hoping that you're learning and grasping as I go along here. If I miss anything, if I explain something wrong, please let me know, and I would try to do the best that I can to correct it on the current video that you see there. Maybe I'll put a pop-up or something that I might have missed, but just let me know. But let me hurry up so I can end this video here. But I want to show you alright, so there's your sell-off. It became Lennar became victim to the sell-off. It became victim to the sell-off for the past 3 days. It actually opened here on Friday. It dipped below the purple line, and of course I don't have any other lines below this level. I actually couldn't find any lines that actually made sense in that level. The only one that makes sense to me in this level would be this level right here, only because I have this area here and then I have this low here. It's the only thing that makes sense. Now another thing that you can do is I'm not going to bring that in, but I was going to bring in the Fibonacci levels. Let's see. Edit. Just going to check off some lines here. Just want to see how this lines up. Yeah, I mean, I can't find anything that makes sense with this dip. Yeah, nothing. Even on Fibonacci, there's nothing I can make that makes sense with this dip. Nothing. I can't even call it a retracement from the bull run from this pullback here, because it still fell below. But what's actually good is that when it fell below the purple line, it quickly got above. Look how many shares we have, 16 million shares. Look at this value that's right here at this point compared with all the other values. Very, very, very strong. Also, I meant to tell you that Lennar actually reports earnings on Tuesday. So Tuesday is going to be a really big day for Lennar. I think that they may beat earnings. They actually beat earnings in January. They also beat earnings in March or April. I believe that was January. It was either January or February. Yeah, January or February. And they also beat earnings in March or April. But they beat earnings due to the strong demand. Lennar is a good company. They actually one of the tops here in Jacksonville that I know of. I mean, of course, I bought one of their houses. So I mean, I like Lennar. I like what they have to offer. They're actually beating out the competition. Trust me, they are. They're beating out the competition, and you can tell by their evaluation as well. I mean, we'll get into that in later videos, but let's get back to this video. I want to hurry up and get done before the 1 hour time frame. But again, it became victim to the sell-off, breaking the 200-day, which actually offered its support at one of the previous days. Breaking support, hitting this line of support as well, trying to stay above, got above, got about 2 days below it. Hit another point that I actually just, another line that I actually just drew. I like the level 2. I didn't draw a big line, but I just draw one of these small lines because I want to know how the stock is going to react at that level 2. And again, we have earnings on Monday. I'm sorry, on Tuesday. I may try to play earnings on Lennar. I've played in January. I played the earnings in January and actually won too. But I may play on this one. I'm mad that I actually missed the dip on this one. Once it dipped below that purple line and it got right back above, that would have been a good buy. It actually would have been a good buy just below this area because Lennar was oversold as well, like gold was. Look at the RSI. The RSI was 3204, close. But the RSI here, of course, it shows higher, 3385. But at this level that the stock was at, when it dropped below here, it was already at 3204. This easily would have taken that out. So once it read oversold, buyers quickly got in. And we could probably tell, looking at the minute chart, a lot of volume in between this time frame. I mean, before fizzing out during the rest of the day, but a lot of volume in this time frame. And look at the level that we actually made. We actually made this purple line not off of the, I didn't make it off of the minute chart, I made it off of the daily chart. But look at how it matches up here and here. A good cup. Look at that, nice cup. There's my 200 day. Couldn't get above the 200 day. Bounce. Couldn't get above this. A nice short. A nice long. Above the 20 day. Above the 200 day. Of course, I like that. Boom. Nice 2 mountaintops. 3 mountaintops. Could have been another good sale. Take it. Now, below the 200 day, almost touching the purple line, which is good. It didn't touch it, but still good because it's a bullet. It's really bullish. From coming back from this level to here, to stop here, shake out. Get back into the stock in this area. You could have had a nice ride up to here, which would have been your high of the day, and to end above the 200 day. But that's how Lennar is running. I'll let you know if I get in long on Lennar. If I do swing, or when I do swing trade, I make sure I swing trade near the money. So if it's the stock is trading at 35 price level, I make sure I get the 35 strike. So when I swing trade, I make sure I swing trade in or really close, maybe 20 cents or 50 cents before the actual stock price. So meaning, like, if it was at 34.50, then of course the 35 would be my strike that I would actually get, because I'm going long. I'm going long and I'm swing trading, so I have a month for the stock to actually react the way I need it to. Alright, so there we have it. There's our this is Lennar. I like this level here. I may buy it if it stays above that level, 34.24. If it happens to retrace back again, that's my double up. That's my double up stage. I'll double up and I'll take Lennar for a ride. So again, I'm not sure how I'm going to trade it, but I'll let you know on Monday's video how I'm going to trade it. So I hope that you are enjoying the series. This is a very long video. I'm sorry about the timing. I'll try to make the other videos short and try not to make them this long, but it's just a lot of things that I just wanted to discuss that I actually didn't discuss in part 1, that I actually got through on part 2. Yeah, I mean, that's pretty much it. So if you have any questions, again, just leave me your comments. I'll get back to you as soon as I can. I'll answer them, and I can't wait till Monday so we can find out what's going to happen here. And I will see you on Monday.